I used to have several sites. Now I kind of like the grower's edge. It gives me that cash max. You can tell it which markets you're looking for, and it will tell you what your highest net back is based on the price they're paying at that time and the basis that they're paying. And that's pretty handy because I don't have to go to so many different sites.
Good afternoon and welcome to GrainTV. It's July 9th, 2013. To my left is Logan Burgess and I'm Brock Shimino. We had a weather-driven rally in Chicago today. Let's turn with a fire tip to see how we ended. Old crop corn was up 18.5 cents. New crop up 21 1/4. Soybeans on the old crop up 22 1/4 cents. New crop up 24 cents. Wheat in Chicago up 14.5. And Kansas City wheat followed right along, up 14 3/4 cents today. You know, Logan, it seemed like the trade was pretty slow in the early going, but once we did get those midday forecasts out, the market really took off to the upside.
Yeah, take a look here at a 5-minute DEES13 corn chart, and as you can see, Brock, just as you mentioned, we did see a little bit of strength here early in the session, kind of bumped our head against 510. That was an area that should be technical resistance. That was the top side of the gap that was left there a few days ago in this chart. We traded off that, but as you said, as those midday expectations came out, we really did see this market rocket higher. And a theme in today's action really did seem to be fund buying. On net, we saw funds buy about 18,000 corn contracts, and that's a pretty darn big one-day move there for the fund net position. I think, though, something kind of to keep in the back of your mind, though, and something that was really telling was this chart that was released by Thomson Reuters here today. Take a look at this chart. Basically, the orange line here is net contract short in corn, soybeans, and Chicago wheat held by non-commercial traders. And as you can see here, this orange line we're seeing the largest net short position in corn, soybeans, and wheat for these non-commercials since going back to about 1996. So certainly these fund traders are sitting on a mountain of shorts right now, and if they're going to get out of this market at all, certainly if they're concerned about what the report on Thursday is going to say, they're going to have to be buyers in this market. It seemed like that was really adding to the magnitude of buying that we saw today. You know, Brock, it was my perception that some of the outlooks that we saw at midday today really didn't warrant a 20-cent higher move in DEES13 corn, but I guess my sense was that really that fund activity really helped push it there.
You know, I think the funds did help push it there. I think some of that technical resistance around 510, as soon as we got above that, there was a lot of buy stops that got hit as well. Right. So I think that aided in the rally as well. You know, if we take a look at something that has become a little bit concerning over the last week or so is the soil moisture capacity across the Midwest. Let's take a look at this map provided by Planalytics. You can see much of the Midwest is still sitting in the 70 to 80 percentiles on soil moisture capacity, but this is down about 10 to 15% since last week. So 1 week change of about 10 to 15%. You know, typically this time of year we do see those reductions in the soil moisture capacity, right. And this is something we're going to have to watch as we move forward here. The next couple of weeks are very critical for the crop development. Right in the heart, we're going to be in the heart of the silking stage for the corn crop. We were 6% silking yesterday, but the fact remains that the good to excellent ratings are still very high for this time of year, 68% good to excellent as of yesterday. You know, that's about 28% above where we were last year at this time. Yeah,
you know, bottom line, I think a lot of traders kind of have last year certainly right in the back of their mind, and the trade seems right now very gun-shy as it relates to these midday expectations. I think that's kind of what we saw today is in my sense. Certainly we're going to have to see what comes down the pipe tomorrow. Typically in the week leading up to WASDE reports, we do get one on Thursday this week. We expect to see a relatively light trade and some position evening. I think that today's trade really didn't fit that mold. We're going to have to see what comes out tomorrow. Certainly would expect a quieter trade as we lead into Thursday's report, but we'll keep you posted on expectations here on GrainTV. If you guys want to watch these markets trade live for yourself and get direct market access, you can visit us over at grainhedge.com and take a demo of the trading platform that you see here on GrainTV. You know, in general, Brock, I think that kind of wraps up, though, what we saw for a Tuesday here in the grain market that really saw a lot of strength across the board. We'll have to see if it carries into tomorrow's trade. Thanks a lot for joining us. We'll see you then.